Hey everyone, welcome back to Corporate Decoded, the place where we unpack the confusing world of business and finance so you do not have to. In this video, we are diving deep into a report from Universal Health Realty Income, trust a company that owns a lot of healthcare buildings, and let me tell you, they have some very interesting numbers to share. You will not want to miss this. Before we jump in, if you appreciate getting straight insights from these corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below where you can chat with us and other finance enthusiasts. Alright, so checking out Universal Health Realty Income, Trust's latest filing a 10Q report for the quarter ending the 30th of September 2025. This report gives us a snapshot of how the company is doing financially over the last 3 and 9 months. Now, this company is all about real estate for healthcare and human services, so think hospitals, medical offices, and even childcare centers. Let us get straight to the moneymakers, the financial tables. First up, the income statement. For the first 9 months of 2025, total revenues were about $74.7 million. This is a slight increase from the same period in 2024, which brought in $74.3 million. It might not sound like a huge jump, but remember, these are big numbers we are talking about. Now, what is driving this revenue? We see lease revenue from non-related parties as a big chunk. For the 9 months ended the 30th of September 2025, this was over $43.6 million, pretty consistent with last year. On the expense side, depreciation and amortization is a significant line item. For the 9 months ended the 30th of September 2025, it was over $21.7 million. It is a big part of owning and maintaining these properties, and it is higher than last year advisory fees too. Paid to Universal Health Services, Incorporated or UHS were about $4.1 million for the 9 months. That relationship with UHS seems pretty important. So after all the income and all the expenses, what is left? Net income for the first 9 months of 2025 came in at $13.3 million. That is a bit lower than the $14.6 million reported for the same period in 2024. A drop of about $1.3 million. Not massive, but definitely something to watch. And the earnings per share for the 9 months ended the 30th of September 2025 was $0.96. Again, a small dip from 2024's $1.06 per share. Now let us look at the company's assets and what it owes. This is the balance sheet. As of the 30th of September 2025, total assets were about $568 million. This is down from over $580 million at the end of 2024. What is interesting here is the debt. They had about $357 million in line of credit borrowings on the 30th of September 2025. That is up from about $348.9 million at the end of 2024. So they are using more of their credit line. And on the equity side for the shareholders, it looks like total equity has decreased from about $179.5 million at the end of 2024 to $158.6 million by September 2025. This drop is mainly due to dividends paid out, which is common for real estate investment trusts. Speaking of shares, the number of common shares outstanding was around 13.87 million as of October 2025. Digging into the notes, we find some crucial details. A big part of their business is leasing to UHS Universal Health Services, Incorporated. In fact, revenue from lease agreements tied to UHS facilities made up about 24% of their total revenue for the 9 months. But when you consider all UHS-related tenants, that number goes up significantly to around 40 to 41% of their consolidated revenue. That is a pretty strong reliance on one major tenant and its affiliates. This relationship with UHS is a central theme. UHS not only rents a lot of space from them, but also provides advisory services to Universal Health Realty Income Trust. It is kind of like UHS runs the show behind the scenes for a fee. Looking at the leases for hospitals, let us check out some key dates. For McAllen Medical Center, the lease term is up in December 2026 with a renewal option. Wellington Regional Medical Center also has its lease ending in December 2026. Aiken Regional Medical Center and Canyon Creek Behavioral Health have much longer leases stretching to December 2033, with many renewal options. Clive Behavioral Health Hospital has an even longer lease ending in December 2040. These are long-term commitments for the properties. They also have investments in what they call unconsolidated limited liability companies, or LLCS. These are joint ventures where they own a part but not all of the property. As of the 30th of September 2025, they had stakes in 4 such ventures. Their share of income from these ventures was about $1.2 million for the 9 months of 2025. For example, Brunswick Associates, where they own 74% of the company, owns the Mid-Coast Hospital mob. These joint ventures have their own debt, which is not on Universal Health Realty Income. Trust's main balance sheet, this diversification is usually good, but it also means they do not have full control. Let us talk about debt. They have a credit agreement that was recently amended. The maturity date was pushed to September 2028 and their borrowing capacity increased to $425 million. That is a lot of money they can borrow. Now for the important compliance ratios, as of the 30th of September 2025, their total leverage was around 44%. This is well within their limit of 60%. Secured leverage is also very low at just 2.3%. So from a debt perspective, they seem to be in a solid position. When it comes to market risks, interest rates are a big one. They use interest rate swaps to manage this risk. They have several swap agreements in place to lock in certain rates. For example, one swap is for $85 million with a fixed interest rate of 3.2725%. Essentially, these swaps help them predict and manage how much they will pay in interest. They do not expect any big gains or losses from these swaps to affect their earnings in the next 12 months. Now for the not so fun part, the risks. This filing flags several important risks. A major one is their heavy reliance on UHS for revenue. If UHS decides not to renew leases or buys the properties instead, it could hurt their income. There is also a new law called the One Big Beautiful Bill Act passed in July 2025 that affects Medicaid. This could reduce revenue for their tenants and increase uncompensated care costs for hospitals, which ultimately could harm Universal Health Realty Income Trust. Inflation and staffing shortages in the healthcare industry are other concerns. These can increase operating costs for their tenants and potentially affect their ability to pay rent. And of course, there are always risks related to government regulations in healthcare and potential legal issues or cyber threats that could impact their business or that of their tenants. So what is the big picture here? Universal Health Realty Income Trust is a company deeply tied to the healthcare industry and specifically to Universal Health Services, Incorporated. Their financial performance is solid but not spectacular, with a slight dip in net income and earnings per S-Hair for the first 9 months of 2025 compared to 2024. Their debt levels are manageable and they seem to be using their credit lines more but are within covenants. What is really key is their relationship with UHS. While this provides a stable base of tenants and services, it also represents a significant concentration risk. Any disruption with UHS would likely have a considerable impact on Universal Health Realty Income Trust. The ongoing changes in healthcare legislation and economic factors also present challenges that could affect their tenants and therefore their own income. Overall, Universal Health Realty Income Trust appears to be navigating a complex environment. They are protecting themselves from interest rate hikes with swaps and seem to manage their debt responsibly. The future will likely depend on their ability to maintain strong relationships with major tenants like UHS and adapt to the ever-changing healthcare landscape and regulatory environment. Alright, that is our breakdown of Universal Health Realty Income Trust's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think their reliance on UHS is more of a strength or a weakness? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. And do not forget to check out the Discord in the description to join the conversation. Thanks for watching, and we will see you next time.